Most people think bookkeeping is either pointless busy work or something you only worry about when taxes are due. The mistake is believing those two ideas are harmless assumptions. What comes next challenges that belief by showing how those assumptions quietly create financial blind spots. So, two dangerous myths. And honestly, I used to think the same thing. But then you start seeing businesses that look successful, solid revenue, decent margins, slowly bleed cash, make bad decisions, and have no idea why it's happening. And at the same time, you see smaller businesses with less revenue that somehow feel calm, controlled, and boring in the best possible way. The difference usually isn't hustle or intelligence. It's whether they actually understand their numbers and what bookkeeping does and doesn't do. In this video, I'm going to break down what bookkeeping actually is, what bookkeepers really do all day, why there are different types of bookkeeper, and how misunderstanding this costs people way more time and money than they realize. At this point, it's easy to think the problem is just confusion or bad explanations. The mistake is assuming the common definitions are mostly right, and the next section pulls apart the myths that cause people to get bookkeeping wrong in the first place. Let's clear the fog. Myth number one, bookkeeping and accounting are the same thing. They're not. That's like saying a personal trainer and a doctor have the same job. They both care about your health, but would you ask one to do another's job? Related? Yes. Interchangeable? No. Myth number two. Bookkeepers just enter numbers. If that were true, software would have replaced them completely by now. It hasn't. Myth number three. Bookkeeping only matters at tax time. This one is quietly dangerous. Taxes are the final exam. Bookkeeping is everything that happens before it. Ignore it, and the test doesn't just go badly, it exposes problems you didn't even know you had. Now, it might feel like bookkeeping is just misunderstood, not actually complicated. The mistake is thinking definitions alone explain its value. And the next section pins down bookkeeping to what it actually does and here's the simplest definition that actually works. Bookkeeping is a system of recording, organizing, and categorizing every financial transaction in a business. Every dollar that comes in, every dollar that goes out, every dollar that moves between accounts. Your bank account shows you what happened. Bookkeeping explains why it happened and what it means. This still sounds simple, which is exactly why people underestimate it. The mistake is thinking simple systems can't cause serious damage when ignored. And the next section makes that damage obvious with an analogy you won't forget. Think of your business finances like a room. Money comes in, packages get delivered, expenses happen, stuff gets tossed everywhere. If you never organize the room, you technically own everything in it. You just can't find anything. You don't know what you've already paid for, and you keep buying things you already have. Bookkeeping is cleaning the room consistently, not just once a year in a panic when guests are coming over, which in business terms is called tax season. At this point, you might assume bookkeeping is mostly about staying organized. The mistake is stopping there. And the next section shows what bookkeepers actually do all day and why it goes far beyond keeping things tidy. So what does a bookkeeper actually do? They take financial chaos and turn it into something you can make decisions with. First, they record transactions, every sale, every expense, every subscription you forgot you signed up for. If money moved, it gets recorded. Second, they categorize expenses. This is where a lot of DIY bookkeeping quietly breaks. That same expense could be marketing, operations, or cost of goods sold, and the category changes how profitable your business looks and what decisions you make next. Third, they reconcile accounts. This is where the books get checked against reality. If your bank says one number and your books say another, that difference doesn't fix itself. And finally, bookkeepers prepare financial reports, profit and loss statements, balance sheets, cash flow reports. These aren't documents for accountants. They're how you know whether your business is actually working. Now, here's where most people think they finally understand bookkeeping. The mistake is assuming every bookkeeper does all of this and more. And the next section explains why that assumption causes so much frustration. This part matters more than people realize. There isn't one single type of bookkeeper. There are different flavors. Think coffee. Same category, very different experience. Some bookkeepers handle accounts receivable and accounts payable. Means sending invoices, tracking who owes you money, paying bills, and managing vendors. Other bookkeepers don't touch cash movement at all, and both are normal. Some bookkeepers run payroll and reconcile payroll taxes. Others will tell you payroll is a separate service. Some bookkeepers handle 1099s for contractors at the end of the year. Others stop at clean reports and hand everything to your accountant. And some bookkeepers are purely transactional. They focus on clean records, accurate reconciliations, and reliable reports. No strategy, no extras. And for a lot of businesses, that's exactly what they need. Now, at this point, it's tempting to blame bookkeepers when expectations aren't being met. The mistake is assuming the problem is competence instead of scope. And the next section shows where this misunderstanding actually causes damage. Here's the biggest mistake people make. They hire a bookkeeper and assume they've hired every version of a bookkeeper. Then they're surprised when invoices aren't being sent, contractors don't get 1099s, payroll isn't handled, bills don't magically pay themselves. That's not bad bookkeeping. It's a scope problem. Bookkeeping isn't a one-size-fits-all. It's modular. Now you can see why bookkeeping gets ignored and why that's expensive. The mistake would be thinking this is just about organization. And the final section ties this back to the real cost of getting. So what is bookkeeping really? It's not boring, it's not optional, and it's not just data entry. Bookkeeping is how businesses tell the truth about their money. And once you understand what bookkeeping actually is, what bookkeepers really do, and why there are different flavors, not just one job title, you stop guessing, you stop reacting, and you start making decisions like someone who actually knows what's going on, which puts you ahead of more business owners than you probably think.